What's going on, guys? Welcome to the weekly technicals video for August 19th. This, just to kind of give you guys an overview of the session, we're going to start off here and we're going to go over the news releases, the upcoming news releases for the week. Then we'll go into the technicals, and then we'll break all the pairs down that I'm going to be watching and the potential setups that I see for this week. And then we'll go over any questions at the end. For anyone that's watching this live, go ahead and post a 1 in the chat box if you could see my screen and also hear me right now. That way I know everything's working okay. And we'll go ahead and get right into this. So looking at the news releases for the week, we do have FOMC on Wednesday here. So 11 a.m. Wednesday. Ideally, we don't want to be in any trades for this. So we're going to look to close any positions by Wednesday, ideally around at the absolute latest, like 7 a.m. Pacific Standard Time. So New York session Wednesday, you don't want to be in any other trades after that. We can look to possibly trade again on Thursday after FOMC, but we want to let this unfold. We don't want to be trading during this particular time. So what I'm saying is there could be a setup Monday or Tuesday that we could take part in, just like as a day trade or a little short-term trade between these 2 days. And then we would look to exit that position before FOMC here. And then if there's another setup after FOMC, Thursday or Friday, we can look to take that. So we do have high impact news for dollar index Friday here, New York session. So we could get some volatility then, which typically we don't trade Fridays, like if it's NFP or anything like that, but there is no NFP, and since we won't be trading Wednesday with FOMC, and Friday looks decent, we can potentially see a little day trade opportunity here. So with all that being said, let's go ahead and we'll jump into the charts now, and we're going to start off with dollar index. So what I'm going to do, I'm going to go through all the pairs on the weekly time frame real quick, and then we'll break each pair down individually and look a little bit more in depth of how we can actually position ourselves this week, and the overall opportunities that we could see within the market based off the direction that we get from the higher time frame. So looking at dollar index here, this is a weekly chart again. If we look and see what current price action is telling us, we have this ICT bearish order block that comes in at 97.05. So last week's high came in at 96.98, so we came about 7 pips shy of hitting that actual level. Now again, I tell you guys, it doesn't always have to hit the specific level. It could come a few pips shy of it and then have the reaction there. And that could be what we're seeing here. So early on in the week, we could just anticipate a potential run up into 97.05. Once we break this down and look at the lower time frames, I'll show you guys why I don't think we'll get that. And I think we're just going to continue lower for this week. So what I'm looking at is a potential short, intermediate term to long-term high in place within this market. So keep in mind, a few weeks ago I was talking about how dollar index is typically bearish during this time of the year, and we have not seen that so far, right? We've been seeing continued bullishness, and that's fine. The bullishness took us where? Up into this weekly ICT bearish order block. Okay, so we do still have liquidity above here, but if you look at what the weekly candle has done, last week we've traded all the way up, and then we traded back below the weekly open and closed below it, forming a bearish candle. Okay, so I believe that they're going to want to continue lower from here. Now it may not be a whole we may not expect something like this coming all the way back down below here, but we could reasonably see a potential trade down into like 95 big figure or something like that, a nice little 100 pip range to work within. So one of the things that we have to consider is, the market is showing rejection off of an ICT bearish order block so far, a weekly ICT bearish order block, which is going to have a lot of it's going to take precedence over any of the lower time frame levels. So they're going to be a lot stronger in terms of support or resistance if you're working with a daily, weekly, or monthly level, something like that. So we're going to go to Eurodollar now. And again, like I was saying, we're going to go through all the weekly charts with the pairs, and then we're going to go back and break each pair down individually. I just want to get a directional analysis. So for dollar index weekly directional analysis, we're anticipating bearishness, which would be weakness, so lower prices. Now if we look at Eurodollar, we've traded down into what? 1.13. The low came in at 1.1301. So by 1 pip we were off. We were calling 1.13 big figure, and we came down to 1.1301. Okay, so the high of this candle comes in at 1.295. So 5 pips away from the actual low, which again, it doesn't have to come all the way down and actually hit the level, but so far look at the reaction. It's inverse of dollar index. We've seen the wick form, and the last weekly candle came back above the weekly open and closed above it. Okay, posting a bullish candle. So again, we could expect a intermediate term to long-term low forming in Eurodollar. Okay, we got a lot of liquidity built up here above the 1750 level, and I think that they're going to want to come back above here before taking it lower. Okay, so if we're expecting weakness on dollar index, and then we look at Eurodollar and we see it's supporting that, we see Eurodollar looking like it wants to potentially start trading higher. Even if it's just back up into the 1.15 big figure, that's still a potential, 60, 70 pip setup. Okay, so looking at Eurodollar in comparison to dollar index, it's acting as if the markets are in sync, right? We see dollar index trading lower while we see Eurodollar potentially trading higher. Okay, so far that's good, that's in sync. Now let's go look at GBP USD. Now this pair, since we had such an aggressive sell-off, there still is liquidity resting below the 25.95 level down here, but they could hold this pair in consolidation. So what I mean is they could keep this low in place and just kind of like hold this market in a range within here and let Eurodollar start trading higher. And once we get to Euro GBP, we'll take a look at why. So that's kind of what I'm thinking. I think Euro USD is going to be the better setup for us. I know we've been trading GBP USD a good bit, but well, at least the recent trades. So we will we're going to look at Euro USD because in terms of price action, it looks clearer to me, right? So we've come down here. We haven't taken out this low, but looking at Euro USD, we've traded into a strong support level as well as clearing out liquidity. So I think that one is going to be more inclined to push higher. And this one here is either going to consolidate or it's going to just slowly, gradually trade lower down to the 25.95 level. Okay, so I'm not really focused too much on cable this week. If there's a setup that forms, then obviously we'll go ahead and take part in that. But so far at the start of the week, Euro USD is looking the better pair to me for the week. So looking at Euro GBP now, if we look at a weekly time frame, look at last week's candle. Okay, so we know the previous week had came up, cleared out all the liquidity, then we came back and closed within the range here. We've gotten back above last week's close, and we showed a bullish candle. So if you're looking at these candles, it looks like what? It's just going to continue higher to run back above this high and take us back up into either the 91 big figure level or come back and even run this high at 93 big figure. So if we're looking at Euro GBP and we're just getting, we're getting ready to break out of this consolidation here that we've been in for a while, we could see, a very aggressive move higher in Euro USD because of the strength that we're seeing in Euro GBP, which would mean overall a weaker British pound, which could cause GBP USD to consolidate. Okay, we don't know for sure if it's going to consolidate, but these are the kind of ideas that we need to have when we're using these three pairs together. So Euro GBP, expecting it to trade higher, which would mean two things. That can either mean that Euro USD is going to trade higher as well, okay, or Euro USD can trade higher as well with GBP USD consolidating, or we can see Euro USD consolidate and GBP USD continue to fall. I'm more inclined to believe that they're going to want to take Euro USD higher, because if we look at dollar index, that looks like we're going to get some weakness, and that in itself means stronger foreign currency, so that would mean higher prices on Euro USD and GBP USD. But then when we bring Euro GBP into the mix, we can see that there's a potential nice bullish move coming, which would lead to stronger Euro over British pound, meaning that Euro USD buy would be the better setup. So yeah, let's go and we'll go over dollar yen now. Now this one's just been consolidating. I don't really like this one too much, but overall I do think we're going to get continued weakness, and I think the next stop is going to be this 109.50 level, which will take us right below this low. So the low actually comes in at 109.367, but we are going to be looking for, what is that, 109.367. But to basically be conservative, we can target 109.50, which is still about 100 pips on the downside from where we're at currently in dollar yen. So looking for weaker prices on this, but overall the price action isn't as clear as the other pairs, so I'm not going to be focusing too much on it. But again, if there's a setup during Asia or something, we'll look to take that. So if we look at AUD USD, so I'm going to cover a few other pairs that we don't talk about too much in the weekly technicals in this video, such as Australian dollar now, NZD USD, and dollar CAD. So we're going to go over all the pairs, because I think coming to an end of August here, going into the start of the fall months, I think we're going to get a lot of volatility going forward, and I want to talk about each pair and what I see unfolding. So if we look at Australian dollar here, we have these equal highs all the way back up here at 81.50, and I don't think that they're going to want to keep this in place for a long time. Now, I'm not just saying they're going to come all the way from down here all the way back up there, but if we look at this in reference to everything else that we've been talking about, we've got a nice little bullish weekly candle here. I don't like that we have the liquidity still resting below this low, which is also this low back here, which is relative equal lows. So early on in the week they could come and take the liquidity below here. I don't necessarily think they're going to do that just based off of last week's candle, but that is a possibility. Ideally though, for Australian dollar, I think we're going to trade back up into this ICT bearish order block, which comes in at 75.60. So that's about 200 pips from where we're at now, but for us to get above that, we need to get above these series of down candles here. So we want to at least see a move above these down candles, and then that would be, become an ICT bullish order block. It could retest that and then trade back up into this ICT bearish order block there, and that could still provide us 100 or even 200 pips depending on what the entry opportunity looks like. So just something I'm keeping in my radar, not something I'm particularly looking to trade or anything this week, but I think we could get some bullishness on Australian dollar based off of everything that we're seeing with dollar index and all that. So if we look at NZD USD now, this one here, same thing. Overall the price action is, pairs are relatively slow moving pairs. This is why I primarily stick to Euro USD and GBP USD. But for those of you that would like to operate in Asia session more, and you're okay with catching 20-30 pip moves, but it unfolding over like 1, even sometimes 2 days, then AUD USD and NZD USD those are good pairs to start with, in my opinion, because they move relatively slow, and you can kind of you can really practice on them. So you're not getting a lot of volatility like GBP USD. You could see like a 70 pip move, you know, in the blink of an eye, but these pairs don't do that too much. So for a newer trader, it may be a better opportunity for you guys to start with something like AUD USD, NZD USD. Really practice, really refine your skill, and then be able to move up into the more volatile pairs. So looking at this one here, we've traded down into this series of down candles here, which is a weekly ICT bullish order block if you look at it. So we're just going to map out the bodies of the candles. Okay, so we got the bodies of these two candles. Once this candle here got above it, it became an ICT bullish order block. You can see we traded down here, used this as an ICT bullish order block, traded down into it again, used it as an ICT bullish order block, traded into it here, used it as an ICT bullish order block, here, used it as an ICT bullish order block. So all it's been used. You know, this ICT bullish order block has definitely been used in my opinion. So do I think it's going to provide enough support for us to just ultimately start trading and get way back above here? No, I don't necessarily think that, unless we get back above the 68 big figure level. Then I'm more inclined to expect a run back up into this here. But we would have to get back above 68 big figure before I, you know, anticipate that. But just looking at this now, I think we're going to get a run back up into this ICT bearish order block, which the low of that candle comes in at 67.10. So I would have that level on your charts and look for that as a potential resistance level if it's going to trade lower from there. So that was 67.10. Alright, and make that level red because it will be a resistance level and solid line. Alright, so I'm going to delete the red box because we don't really need that anymore. But ultimately, I'm not saying that this is a potential low, but if dollar index really starts selling off significantly, we could see, you know, a lot of strength in these foreign currency pairs. But if we're gonna continue selling off in this pair here, 67.10 would be the next level of resistance that I would be watching for. And if you can get bearish price action, then you can look for a sell there and then target the next set of swing lows down here. Alright, so, and the last one was dollar CAD. So this one has still been consolidating as well, really. But I think this one is going to have a nice little decline, in my opinion. So we've come up into this down candle here, which is an ICT breaker. From trading into that, we sold off a little bit, posted a lower high here, lower low. So we've got a lower low, lower than the previous low, formed a potential lower high last week, and if we start trading lower this week and get below this low, then I definitely think we're going to want to trade lower in dollar CAD. Again, I'm not really focused on this pair too much because I do think, in my opinion, Eurodollar is the clearest pair going forward for me. So that's the one I'm going to be focusing the majority of my attention on. But all of these other pairs are valid to trade as well. Just have to find your setup and, you know, what particular times you prefer trading and what specific pair you like to trade. So for dollar CAD, I am expecting a run below the 1.30 big figure, which is about 60 pips from where we're at now. And if we get some nice movement below there, then I'm going to be looking for a run below the 26 big figure down here, and then just further continuation to clear up these lows in here. So first things first, I need to see them get below 1.30 big figure. But that does look like that's in the cards for next week at least. So let's go ahead. We're going to move back to dollar index and we're going to work from the daily charts now that we pretty much have our directional analysis, and we're going to talk about each pair and what it looks like and the levels that we could be looking at to operate as a trader. So if we look here on the daily, this came up and just shy of our weekly ICT bearish order block. But if you look at the daily chart, we've posted a swing high now. Each candle on each side of it is closed lower, and we've seen selling here. Okay, So the next level of support in this market is all the way down here at 95.50. Okay, so it's about 60 something, 65 pips or so from where we're at now. So that could lead to a potential 65 pip to 100 pip bullish move in foreign currency. And that in itself is enough for a trade. Okay, so that's what we're going to be looking at early on in the week before FOMC. Initially I want to be a buyer of Euro USD, catch like 50 or so pips, 30, 50 pips, whatever it can give me. Close that before FOMC on Wednesday, and then we'll go and look for another potential trade Thursday and Friday. So next level of support will be that 95.50 level. If we get bullishness there, then we're going to look for continued higher prices. Okay, but up until we get to that level, I think we're going to see continued weakness. Now, if we can get below this candle here, which the low comes in at 95 big figure, so if we get below 95 big figure, in my opinion, I think we're going for these equal lows at 93.20. Okay, so this in itself could be a nice swing trade if this is in fact the intermediate term to long-term high in place now. Okay, and when I say intermediate to long-term high, all I mean is a significant swing high that could lead to a longer-term swing. So what am I saying? This is a high, okay, and I'm anticipating like we're relatively still close to that high. But if this is a longer-term high, that means that they shouldn't even come back up there. So we should just see continued weakness. Okay, so I'm anticipating the move below 93.20 that we've been talking about for months now. And if this is in fact the high and we can get below 95 big figure, that proves to me that we're going for 93.20. But framing the idea of thinking, okay, this could be the high is what I'm leaning towards, right? So this could be the intermediate to long-term high, and we could see significant weakness from here now because dollar index has done everything it's needed to do. Okay, so it's got everybody trapped thinking that it's going to continue higher, all that, and then now they could just sink it if they want to and take out all the liquidity below here. So think about these lows. This was an intermediate term to long-term low, right? So the market traded away from this level very aggressively. Huge bullish candle. Came back down here, traded into the bullish order block, but it didn't come below these lows. Market continued to post higher highs, higher lows, and we finally hit a level which is showing significant resistance, which as it should, it's a weekly bearish order block. Okay, so now we've got that. So now what I would like to see is a move below 95 big figure like that, and then we can look for a retest like that, and then sell that for a continuation below 93.20. Now, once we move to the lower time frames, we're going to see other opportunities how we could potentially, get on board the trade while it's still up here before letting it get down here. But if you do miss the move up here, this is all you have to wait for. Wait for it to get below 95 big figure, trade back up into these old bullish candles, bullish order blocks, which once it's traded through becomes resistance. Sell it there and look for 93.20 as a target. Okay, so with all that being said, let's go ahead and we're going to drop down to the lower time frames now to really talk about how we can get on board this potential trade. So if we look on a 4-hour basis, what do we have now? We've broke market structure. We've got a lower low. We've closed the body of the candle, big bearish candles closed below this low here. So what can we expect going early? Starting off in the week, what can we expect for this market to do? Initially, the week, like whenever the week is opening, generally the high or the low of the week forms early on in the week. Generally Monday, Tuesday, sometimes Wednesday. So if the high of this pair, so of dollar index, if the high of the week is going to form early on in the week, what could we expect, or where could we expect this market to trade into to find that resistance where the high of the week could come in? So we have this level here. Okay, this level is 96.15. 96.15 is a resistance level. What type of resistance level? Old support, now broken through, turned resistance. Okay, if they trade higher from here and they don't find resistance at this level, that's completely okay. We have an ICT bearish order block right here. The low of this candle comes in at 96.40. Okay, so they can very well take this pair up 30 to 40 pips, hit this level as resistance, and then sell off from there for the rest of the week. Okay, these are the two levels that I highly recommend that you guys keep on your charts this week. So 96.15 and 96.40. Keep those levels on your charts and watch as price action trades into those levels. Really watch it. So when the market is pushing up into this level, drop down to a 1 hour or even a 15-minute. Okay, generally I like to work. I'm operating between a 15 and a 5-minute chart when I'm looking for my entries, but when I'm waiting for price to trade into the specific level, I'm always on an hourly chart. Most of you guys' problem is you're sticking to a lower time frame and you're closing the trade too early, or you're feeling like maybe you put on too much risk. I'm not sure what specific things are going through your head, but you can't be operating from a 15 or a 5-minute time frame expecting to catch big moves or even trust the trade that you're in. You can trust the trades by operating from a higher time frame. That's why we started with a weekly at the beginning. Then we moved down to a daily. Now we're on a 4-hour. We're framing everything little by little from the higher time frame down. And most new traders, and I'm sure most of you guys in the group are not working from lower time frames up. I'm primarily, because this gets posted on YouTube as well, I'm primarily talking to the YouTube audience because most of them, what you guys are doing is you're focusing on a lower time frame and then you're working up from there. So for example, you're looking at the charts, 15-minute time frame. Oh, okay, this is nice bearish movement. Okay, so we're gonna see continued weakness from here. So wait, let me go back out and check a daily. Oh wait, a daily, this is bullish. Oh, I don't know if this is going to keep going bearish, if this is bullish. And then it's a constant battle back and forth. Okay, and you eliminate that battle by starting with the higher time frame first. Okay, there's no stress when you worry about the higher time frame first because you already have framed the big picture. Okay, so you're dialing yourself in to that big picture. So we've already framed the idea that we think dollar index is going to be bearish. Now we've went to a daily, now we're on a 4-hour and we see, okay, we've got a market structure break. Okay, so what is that? That's a confirmation of weakness for me. Then there's two levels of resistance right above it that we could trade up into early on in the week. Okay, so keep these levels on your chart, 96.15 and 96.40. Both of these are going to be levels of resistance that if the market hits those levels, you want to then drop down to so you're probably watching it on a 60-minute time frame as the market's trading into these levels. You need to see what type of behavior you're getting in the market, right? So that's why I'm usually on a 15-minute once we get to these levels, and I want to see the market posting like a setup like this. So we'll see a high. So say this was the resistance level. Trade up into the resistance level, sell off, form a lower low, trade back up into a bearish order block or some sort, and this is where I'd look to sell it. Okay, that would be the confirmation for me. We got the lower low, we've traded below here, we're trading back up into what? A logical level of resistance. Look for a continued sell-off. Okay, so that's what I want to see happen at this level here. So just so you guys, this level or this level. I don't know what level it's going to happen at. We have to wait and let the market show us what it's going to do first. Okay, so those are the two levels that I'm watching for resistance. So let's go back out to a 4-hour time frame. And okay, now that we know that these are our levels, let's drop into a 60-minute chart and see, is there anything else that we can operate off of? Well, there's a few things, right? We have this up candle before this big sell-off, which would be an ICT bearish order block, a very small ICT bearish order block, but it would be an ICT bearish order block. So we have a few other levels on the lower time frames that could act as resistance as well. First level being this low here. Why would this low be a potential resistance level? Well, on a 1 hour, it would just be a 1 hour resistance level, okay? Keep in mind these other ones are 4 hour resistance levels, so they're a lot more high probability than operating from a lower time frame such as a 1 hour, 15 minute, etc. For a resistance level. But they're still important to keep on your charts because this could be the level that they trade up into. Okay, it may not be 96.15, but it may be 96.20. And the reason would be is because it's a 1 hour level and you were sticking to a 4 hour. That's why you have to use every single time frame, but you have to start with the higher time frames first. So 96.20 is this low, which was what? Traded down, acted as support, traded higher. Okay, we broke through that here. Old support, now resistance. Again, it's not strong support or anything like that. It's just a 1 hour support level, turn resistance. So it may hold as resistance, it may not. It's okay. We just have to focus on where does price show us lower lows and lower highs, confirming that specific level as resistance. Okay, so we don't just know, we're not just going to sell it as soon as it trades here, sell it as soon as it trades here, and sell it as soon as it trades here. No. And see, that's the mistake I made as a beginning trader. That's what I did. And that's what costed me a lot of money, is because I wasn't waiting for the confirmation. So what you have to do is wait for the market to trade into the specific level. Then you're operating from a lower time frame, such as a 15-minute or a 5-minute, waiting for the confirmation. You want to see lower lows and lower highs if it's trading into resistance. And then if it's trading into support, you want to see higher highs and higher lows. Once you get that confirmation on the lower time frame off of the higher time frame support or resistance level, then you know you have a trade set up. If you don't have those things, then you don't have a trade set up. It's that simple. All right, so we have 96.20 on our charts, and then we also have this ICT bearish order block on a 1 hour basis, which is a little bit above the 4 hour level that we marked here. So we're going to go ahead and put that on our charts as well. So we're going to make a copy, and then we're going to put it on the low of this candle, which comes in at 96.44. Perfect. It just doesn't look like it's on the low. All right, 96.44 on the low of this candle. The reason that we're using the low of the candle is just because that is the nearest price. So we could use the open, which comes in at 96.45, but I mean the low is 1 pip below that at 96.44. So I'm not gonna expect 96.45, when I can use 96.44. And then keep in mind we also have 96.40, which is the 4 hour level. Okay, so we don't know which level they're going to use. It depends on which level they find or show us resistance at. Okay, so dollar index, I highly recommend that all you guys have those levels on your charts. Okay, so 4 hour, these levels. When you break down to a 1 hour, you should have these additional levels. Okay, so make sure you have those levels, and then we're going to be looking for lower prices from there. Okay, because we're anticipating a potential intermediate term to long-term high in place at 97 big figure. So remember how when we were looking at the weekly, I said, we could see a move back above 97 big figure and hit that weekly block and then trade lower. But when we're looking at this from a 1 hour or even a 4 hour basis, does it honestly look like they're going to want to trade all the way back up here once they've closed below these lows? No, because they've got so much liquidity that they can take up within here. They've got everybody convinced this thing's going to go higher now, so they're just going to drop it lower and clear out all the people that were buying this thing. Okay, because seasonally we're bearish. Now we've got a few things lining up in the charts that could indicate weakness. We've got FOMC on Wednesday, so we could see accelerated weakness then. You see what I'm saying? How all these things are kind of like lining up and they're coming together as one. And that's the element to finding like a perfect trade, right? You want all these things to come together at the same time, and then there is no question if you're thinking, is this trade gonna go in whatever direction you think it's gonna go? Like if that question crosses your mind, if you have to think, is it gonna go there? It's probably not. 9 times out of 10, it's not. Okay, because a high probability trade setup is like a no-brainer. There's multiple things lining up, so there's no question of if it'll work or not, or if it's going to go to that specific level, because there's multiple things confirming the same idea. Okay, so keep that in mind when you're looking for trades, right? You don't want to be just like firing off every single trade you can every single day, because that doesn't lead to profitability, right? You have to develop consistency and accuracy in your trading. And the only way that you're going to do that is by refraining from trading so much and focusing more on the high probability setups. So spending less time looking for trades and spending more time studying where the high probability trades were. All right, so we're going to move back out to a daily, and then now we're going to go into Eurodollar, and we're going to talk a little bit more about this one. So for those of you that are watching this live, I told you it's going to be a pretty long session because we're breaking each pair down, and that takes a long time. And then if you guys have questions, that'll lead to a little bit longer as well. But I want to just make sure that everything is talked about, because I think we have a lot of nice potential setups coming in the markets, this upcoming fall. We had a very, very slow summer. So generally that leads to a very volatile fall, winter months. And I think that's what we're going to get. So if we look at Eurodollar now on a weekly basis, we said, okay, this could be an intermediate term to long-term low in place. Now on a daily basis, what do we see? Well, we see the market closed above what happened here. An ICT bullish order block on a daily basis. We've now closed above that. So think about what we've got now. The market's traded into a weekly support level, okay, just shy of it by 1 pip, but that's more than enough. Okay, it came all the way down here to hit that, right? Remember when we were talking about these equal lows at 1.15 big figure? We were saying, oh, when they get there, they could retest it and sell, continue selling off. And they did retest it on a lower time frame. But if you look on a daily, it was just continued expansion. They were wasting no time. They wanted to get to this level. Okay? Now they've started to trade higher, back above this down candle. ICT bullish order block on a daily basis. Okay, so you need to have these two levels on your chart. The high of this candle comes in at 14.29, so you could just use 14.30, and then the open of this candle comes in at 14.09, so you can use 14.10. So 14.10 and 14.30 are both levels that you want to have on your charts, because these are the two levels that we should see this market find support at to continue trading higher. Now, of course, we could trade lower into the 50% level. So we're going to put that, I wanted to wait and put that on the chart with you guys together so we can have the price level. So we're going to use the open, which comes in at 14.10, and then the close, which comes in at 13.44 and 14.10. Okay. And so we need to draw our 50% level on the 50% line, which comes in at 1.1377. 1.1377. And now we want to make this a dotted line, blue because it's support. All right, perfect. So now what we can anticipate is this market has 3 levels below it that it could potentially find support on a daily basis. Okay, so have these 3 levels on your chart, because the absolute lowest we should see this market go, if it's gonna continue trading higher and remain bullish overall, we do not want to see it trade below and close below this 50% level, which is 13.77. Okay, so if we get below this on a daily basis, everything is off for the bullish idea and we switch to bearishness and we look for continued lower prices back below 1.13 big figure. Okay, as of now, I think we're running back up into these equal lows, which come in at 1.15 big figure. Okay, so that's going to be my first objective. So what I want to see is early on in the week, just like we were talking about for dollar index, I want to see the low of the week form in Eurodollar. That could be Monday, that could be Tuesday, that could be Wednesday. Whatever day that forms, it should be around or at one of these 3 daily levels. Okay, so say that's this level, this level, this level, whatever. We're going to use this one. If that's the level they find support at and start trading higher, this is what we should see. We should see continued expansion off of this level, and the market should not want to trade lower once it's found support at one of these 3 levels. Okay, first target is 1.15 big figure. Then I'm looking for this low here, which comes in at 1.1530, and then I'm looking for the low of this ICT bearish order block, which comes in at 1.1550. Okay, now if we get back above the 50% level of these 2 candles, which is an ICT bearish order block on a daily basis, if we get back above this candle, the 50% level, so if we get above it like that, then anticipate the market to trade back, find some level of support there, and then I want to see the market trade back above 1750, because look at what we've got here. Look at all these equal highs in here. 1, 2, 3, 4 times we traded up in this level and then we just sold off. Okay, and they traded aggressively lower to get to some level. Okay, that is more than likely this level. That's what we're painting this picture with. Okay, so this is the level that they needed to come down to get to before they can push it higher. Now, matter of fact, I'm going to save this as an idea right now. So we have this. Euro USD long-term low and place to 1.1750. All right. Okay. Let me just publish that. All right. So now I just wanted to save that so I could delete this, but I'll still have like that reference. So I think we're gonna get higher prices on Euro USD because of what we've already talked about with Euro GBP. As well as looking at this here and just all the liquidity that we have built up above this market here. And we've also formed an ICT daily bullish order block. So again, all these things coming into play, right? Everything is lining up around the time that it should. Seasonally, Euro is generally bullish during this time of the year, right? So we should see some bullish price action. We didn't see that initially, so it's coming a little late, but it's very likely that now we should see some strength in Eurodollar because we've gotten a daily ICT bullish order block to form. We've traded into the weekly level. We've got liquidity above the market. We haven't retested this level yet. There's multiple things lining up that would take us higher, in my opinion, in Euro USD. So if we look at a 4-hour chart now, we've got that break in structure, right? We've got a higher high that just formed above this high. So we've got a break in structure. Initially, the market was doing what? Trading lower, making lower lows, lower highs, lower lows, lower highs, lower lows. Now we've done what? Traded all the way back up, and we've done what? Made a higher high. Market structure break. Okay? So now we have to assume that the market's going to want to push higher. Where would they trade down and find support? Well, we've already got our daily levels marked here. So we've got that on the chart. There's nothing really that I want to work with on a 4-hour that I see. If we drop down to an hourly here, we've got this down candle, which is a clear ICT bullish order block on an hourly basis. So we can use that. And the high comes in at... The high of this candle comes in at 1.1399, so we're going to use 1.14 big figure. And usually, guys, if it's like that, if it's like 1.1399, then, it's 1 pip, I'm for sure just going to use 1.14 big figure. It's so much cleaner. So adjust that to 1 hour. Okay. So now we have another level of potential support that the market could trade into. So we've already got our daily level, and our daily level. This here is our 1 hour level. Okay, because it's an ICT bullish order block. It's a down candle before an up move, which should act as support if the market trades back into that. Okay, there's no clear ICT bullish order block in here. It's just very small body candles. So if it's going to trade lower, it could just use one of these daily levels. It doesn't have to come all the way down here. But if it does, then we could see some support at this level here. Okay, so that 1.14 big figure level. And ultimately, you guys already know, look for the 1.15 big figure level. And if we get above that, we're looking for 1520. Then we're looking for 1550. And if we can close above 1580 here, then we're going to look for continuation all the way up to 1750. So this could lead to a potential 300 pip move. But this is how you spot a swing trade early on. Okay, you have to have the market trading into a key higher time frame level. Then you have to then you drop into a lower time frame, and you have to wait for the market to prove to you that it's going to want to go higher by what? Showing a break in structure. That's what we've got here. We've got a daily order block lining up. We've just got multiple things lining up at the same time around the same levels that are leading to believe that we could see significant movements in these pairs, swing trade opportunities. So a lot more than just a day trade of 30, 40, 50, 100 pips. We're talking 2, 3, 4, 500 pips setups because these are going to be longer term. So we may have our stop loss way down here below 1.13 big figure, which would be 140 pips, but we're targeting, 1750. That's 350 pips away. That's massive returns. And obviously as we're operating from a lower time frame and we're, doing like day trades and things like that, we're able to scale out. And generally I am a day trader, but based on these levels that we've been going over in this video, these are swing opportunities in my opinion. So all of your stop loss and things like that would have to go below the daily level. So like your daily low of 1.13 big figure is where your stop would have to go if you bought it at any of these levels here. Okay, but your the overall trading, if you're looking for buy setups and things like that, you don't have to hold it as a swing trade all the way back up to 1750. We don't even know if it's going to 1750 yet. We have to first get to 1.15 big figure, and that's how I operate as a trader, right? I'm looking for a trade into, if it comes into 1.1430 here, I'll buy it, and then I'll look to close my position at 1.15 big figure and capture 70 pips. That's how I operate as a trader. Now, with my longer term account, I can easily place a buy order at 1430, place my stop loss at 13 big figure, and just let it go to 1750 and just forget about it. Okay, because if I'm going to get stopped out, I'm going to get stopped out. If it's going to hit my take profit, it's going to hit my take profit. And like with a swing trade, you have to give it, plenty of time to unfold. This could be weeks or even months. When I'm talking about a day trade, that's why I like it more, because it's a lot quicker. So I can buy it at 1430 and I could see 1.15 big figure the next day, which would give me 70 pips. And like depending on what position size you're trading with, that's plenty enough to be okay with, and that's kind of the mentality I operate with as a trader. But for you guys that may have jobs or don't have as much time to look at the charts, then you can take these swing positions, catch 300-400 pips, and over the course of a month or two, add that additional income, to your bank account or wherever you want to put it. So I think that's everything I want to talk about for Eurodollar. So let's move back out to a daily, and we'll go over GBP USD now. So GBP USD again, this pair I think we're just going to get some consolidation. On a daily, there's nothing clear that I see that I want to operate or talk about. 4 hour, just consolidating, nothing really to talk about. We're within this ICT bearish order block, so we could see some weakness Because remember, again, I said that we're either going to get weakness in GBP USD or we're going to get consolidation. I don't necessarily see strength coming in yet unless we get some form of break of market structure, but I do see strength in Eurodollar right now. So, looking at Euro GBP, that's given me the reason to believe that GBP USD could consolidate or just gradually trade lower, because we don't have much to work with, in my opinion, yet to say that this pair is going to continue higher and just switch the idea like that. So just keep in mind that we have this ICT bearish order block that we're working within these series of up candles. Before this big down move is an ICT bearish order block. So we traded up into it here initially, but let's just see what we get if we show weakness off of that. But again, I'm primarily focused, like my number one focus all this week is Eurodollar. I want to take part in that. That's a much cleaner setup to me than any of the other pairs that we've talked about. So there's really nothing particularly that I want to talk about with this pair. Just have this low on your chart, 27.60. I'll tell you why right now. Alright, so the reason you want to keep 26.60 on your charts is we sold it last week up here at 28.30, 28.20, 28 big figure, whatever level that you got in at. This is the sell opportunity that we took, and you can see we see nice movement off of there. And after that, we just consolidated. Didn't really do anything. So if we look at the actual move that took place that drove us up into the 28.30 level, this low right here would be the low of a 3-hour ICT bearish order block, because we have 3 hourly candles here. So if we draw that low out, it comes in at 27.60. The market hasn't traded back up to that level, but that could be enough resistance for the market to trade lower from there. So what I'm saying is, early on in the week, we could see the market trade up into that level and then start trading lower from there. So again, I'm not expecting much with this. Like, it could very well just consolidate in this range. Like, it doesn't have to break below this low. It can keep this low in place and just, bounce back and forth in the range. That's why ideally I'm focused on Eurodollar. But, have this 27.60 level on your chart and see how price behaves when we do trade up into that level. And if we find resistance, then obviously you would be looking for each swing low going forward as potential target opportunities. So move back to a daily. Euro GBP, if we look, so just to kind of refine this a little bit more in detail, we were mentioning the ICT bullish daily order block here. We had the open and also the high drawn out. You can see that they didn't use the high, so we can take that off our charts. They came down to the open and they used that, and then they started pushing higher. Okay, by pushing higher, they formed another ICT bullish order block here with this down candle. So we're going to want to go ahead and put that on our charts now, because if this market's going to continue higher, there's no need for them to come back into this candle here. They should just use this one that just recently formed. So we have the high of that coming in at 89.43. So we're going to put that level on our charts. All right, and then we also want to use the open, which is 89.36. So just like for this candle, we had the open and the high. We don't know which one they're going to use, but we have to put both on our charts, and then as price trades into those levels, we can figure out which one is a better opportunity. So 89.36, perfect. All right, so as you can see, this candle actually did already trade into it. The low came in at 89.35 and started pushing higher. So it doesn't necessarily have to come back to it, since this candle did already hit it. Like, by this candle closing above it, it validated this down candle as an ICT bullish order block. Then this candle opened up, traded lower into the ICT bullish order block, and started pushing higher. So it doesn't have to come back to this, but if you move to, like, on a daily basis, for example, there isn't a down candle that's trading into this. and that's generally like what we would look for. Like this down candle is trading into these down candles, buy it here. Next days you see bullishness. Like that's kind of what we look for. So if we move to a 4-hour chart, you can actually see the candle here that retested the order block. So we got above the order block here, retested the high here, then this candle opened up and we retested the open. So it cleared out the liquidity of the people that maybe bought here and tried placing their stop loss, right below this low, cleared them out, and it went down and hit the open, and then we seen bullishness from there. So by looking at a 4-hour now, we have some more support levels that we could draw on our chart because we have a new ICT bullish order block. These down candles, or this little pocket of consolidation, since we've gotten above that, if the market trades back into that, it should act as resistance. So the high comes in at 89.60. So just have 89.60. And I want this to be visible only on 4 hours and lower. And we're going to make a copy of that to also place on the open of this candle here, which is 89.55. Alright, so now we've got those levels marked out because we could see support come in there. We don't necessarily have to see it come all the way back to 89.30, 89.40-ish, but it could. So we want to have all those levels on our charts because those are the potential support levels. Now in terms of higher prices, so in terms of where they're going to go, first stop is going to be above this high here, which comes in at 90.30. So look for the 90 big figure, and then you're going to look for 90.30. And if we get above that, we're going to be looking for a retest of this ICT bearish order block, which the low of this candle comes in at 91.15. So have that level on your charts, because longer term, that's where I think we're going to be heading if we continue bullish, which that is about 150 pips from where we're at now, which could lead to about 100, 200 or so pips in Euro USD to the upside as well. So that's why we want to focus on Eurodollar. Right, so dollar yen, there is actually nothing I want to talk about with this pair. I'm just trying to see if there is anything specific. Overall, we're just in a consolidation, but if you look at it here on a 4-hour basis, this up candle, we closed below it here. At the end of the week, we were trading right back into that. So I think we're going to get continued weakness. I mean, this should hold as resistance if the market's going to trade lower. I thought we would get a move back above 112.20, but we just traded above these stops here and then sold off. And we're now within this ICT bullish order block, but I don't necessarily think they're going to hold this as support. I think they're just going to continue trading lower. And in terms of targets, I'm looking for this particular level, which is 109.40. which is this like triple bottom thing that going on down here. I don't think they're going to want to keep this in the market. So I think that's where they're heading. So if you look, we had a nice like explosive rally from that. And if you look here, we've got the breakdown. Okay, so we've broken down below all these lows, pushed up one last time, cleared out the liquidity, and started to break lower again. So I think we're just going to continue lower from here, in my opinion. So just, pretty much just see continued selling in dollar yen. There's nothing specific that I want to talk about or I'm not really focused on this pair because it's not that clear. I'd much rather just participate in something that has a lot clearer price action to me. Australian dollar, I'm looking for this low, which comes in at 73.48. $73.48, copy that, and we want to make this red because it's resistance. And then if we get continued strength above that, you know, I think they're going to want to run above these highs here at 74.50 because we've got a lot of liquidity built above here. So what I'm going to do is I'm just going to go ahead and throw another line up here at 74.50. So it may not be above, you know, on the specific wick or anything like that, but 74.50 is a good level to target in my opinion because there's a lot of liquidity built above there with those equal highs. So I mean, obviously anticipate a run on the actual high at 74.65 and a potential run on these highs at 74.80. So we can put those levels on our charts as well, but 74.50 is just a good level to use because it's lower than the other levels, but it also would take us above the liquidity that we see above the market. So 74.80 this one was. Alright, so we've got those levels on our chart now. If we look at a 4-hour, so we've also got our market structure break here as well. So we're forming lower lows, lower high, lower low, lower high, lower low. Finally, this candle just missed it, but with this candle we got above these highs here. So we've got a break in market structure on a 4-hour basis, and I think we're going to want to continue higher into this. So that would be the low of this candle here, old support, traded through it, turn resistance. And we've also got all these equal highs and liquidity built up above this consolidation that we've seen here in Australian dollar. So longer term, or you know, over the next coming weeks, months, you want to be looking for all of this liquidity above this market to get cleared out, because all those retail traders that think they're smart for selling the double tops and buying the double bottoms, all that dumb shit, it's irrelevant. None of it matters. So even though we've seen a nice little move from this double top or double bottom, doesn't matter. We can sell it and get on board multiple selling opportunities from there. Now they're holding on to these positions thinking, please don't come and take my stop above these equal highs. Well, it's clear that that's where they're going to go because there's so much liquidity resting above the market. Why would they want to let all these people stay on? So why would they want to keep dropping price lower and let all these people that sold it in here make money? Why wouldn't they want to come above here, take all them out, and then drop it lower? Because if they come above here, they get everybody thinking it's going to go higher, and then they could just turn around and drop it. And that's how the market works. It's doing the complete opposite of what all the retail people are thinking. So look for that on Australian dollar. NZD, USD, just have the level that we mentioned earlier on your charts, which was 67.10. Must have been the weekly level. Yep, the weekly ICT bearish order block. So have that level on your chart, 67.10 for NZD, USD. That's the next level that I'm going to expect this pair to trade up into. This one as well, we've got a market structure break. So we were forming lower lows, lower highs, lower lows, lower highs, lower lows. Then finally, this candle here, we've broken above all this consolidation, showing strength. So you want to mark out any support levels, which would be this down candle here. It comes in the form of an ICT bullish order block, which is the down candle before the up move. This candle closing above it validated it as an ICT bullish order block. So we're going to have that level on our charts, which is 66.07. Perfect. So if we trade back down, this should be a level of support, and we should see higher prices from there. And that would just look something like this. So we'll trade down, hit that level, find some support, you know, show us bullish price action, trade up, form a lower high. I'm sorry, a higher low, higher high, all of that. Come down, retest it, and then ultimately look for the 67.10 level. Okay, so I'll just save this as an idea too, that way it's just alright, idea. Cool. So now we've got that. So I just wanted to save that in case we do get this price action, because that's what it's looking like to me for NZD/USD. Alright, so I don't think there's anything else I want to talk about with this one. No. Alright, so last pair, dollar CAD. If you look at dollar CAD, so we've got these equal highs here at 1.34 big figure, but I don't think they're going to want to shoot for those, because if you look, we've traded lower, traded back up into what? Three down candles here, up candles, which are ICT bearish order block, traded into it, sold off, formed a lower low here, we traded back up into what? This ICT bearish order block here, consolidated, sold off, and I think we're just going to want to continue lower from here for dollar CAD. So next stop, in my opinion, is the liquidity resting below this low, which comes in at 29.65. Alright, and then we also have this little pocket of liquidity here at 27.50. So just keep that level on your charts as well, because longer term, if we just get like continued weakness from here, I think this is where they're heading. There's just too much liquidity underneath there for them not to want to trade below it. So 27.50. And if you look on a 4-hour basis, equal highs here, nothing really. So that was nice. We traded above the what day was this? This was a while ago, like August 7th. But we had marked out this like triple top, talking about, you know, what's above here, and clearly they came above that, and it didn't waste any time to get above that. So just, you know, there you go, another example of outlining those double tops, triple tops, double bottoms, triple bottoms, whatever, and, you know, just watching them get blown out because retail traders are trusting this as resistance. They're selling it here, selling it here, selling it here, and then the market's like, fuck you, and then they just push it up and clear out all the liquidity above that. So 4-hour, nah, nothing really I want to talk about here. Now if you look on hourly, we've got massive big body down candles here. So this is basically telling me, like, okay, like they're ready to go, you know. And I think, you know, where they're going to be heading is those levels that we talked about. So 29.65, and what was that other level that we mentioned on the daily? 27.50. Yeah, 27.50 and 29.65. Have those levels on your charts, because those are the next downside objectives for this pair here. And then, you know, stop loss or anything like that should be pretty safe above 32 big figure. But like to really, you know, for a longer term swing trade, if you're targeting these lows at 27.50, I would, you know, to be safe, I'd have my stop here above, what is this level? I would have it just above the close of this candle, which is 32.70. So I'd keep it at 32.70, and that itself would be about 200 pips away from where we're at, and then we'd be targeting 27.50. So that'd be about like 300 pips or so. So that's not too bad, but once we get below this low, I would trail my stop loss right above this high at 1.32 big figure. So that would eliminate some risk there. But yeah, so I think that's everything that I have to go over for the technicals portion for the video. So I'm going to go ahead and wrap up the technicals portion here. And if you guys have any questions, go ahead and post those in the chat box now so I can answer those for you. But I'm going to go ahead and stop the recording now for the technicals portion.